All right, my friends, it is June the 24th, a bit into the New York session. Let's do the market outlook and plans for the week ahead. So let's go ahead and start off with the intro shill. So like I discussed last week, I'm going to be officially sharing the introduction to trading at some point here soon. Paragon Group is going to get access to it first, most likely going to get access to the rough draft this week. And then later down the line, I'll release it to the public. Next thing that we're going to address before we get into the outlook is the Mt. Gox selling. So that is kind of our narrative or event, if you will, that we have taking place right now. I don't really expect it to amount to too much. They had about a 3% drop on Bitcoin after the New York session opened up upon the news that Mt. Gox is going to do something, right? You know, we've heard these Mt. Gox things for years now. If you've been in this space for a long time, you should know that they're essentially nothing burgers, at least historically. Hopefully this isn't the one that offsets that and actually ends up creating some sort of larger move. But yeah, historically, these Mt. Gox narratives have been really short-lived, and considering the fact that it's lining up with range lows, I really don't think that the selling is going to amount to anything. So we'll cover that in more detail in the medium time frame. Let's go ahead and get into the Bitcoin macro. So Bitcoin macro, really straightforward, guys, right? No dramatic changes. You should notice this with my higher time frame plans, that they are essentially remain the same for months at a time. It takes a lot for my higher time frame plans to need changing. So we'll just do the standard run through that we've been doing for months now. First point that we always make is that we're trend respecters, right? This is a massive uptrend that we're seeing, right? Point number two, we're building out this range from 60 to 70K for 3.5 months now. Point number three that we're going to make is that quarter three is upon us. So we have, Q3 popping up in about a week from now. I think that that's where the environment shift is going to really start to take place. So Q3 right around the corner. As I've said for months now, I think that the beginning of Q3 will more or less be the same as what we've seen in Q2 this year, but later into Q3 is when momentum starts to come back. Q4 is when it comes back in a big way and we see trend continuation. I am planning for scenarios where I'm wrong and we get, a trend reversal and trade back towards the 40s. That would absolutely decimate market participants. I am prepared for that scenario, although I give it lower weighting in terms of probabilities. I think that us breaking upwards from this range is still the highest probability scenario for myself personally. When you just weigh the headwinds and tailwinds against one another, the tailwinds are definitely seeming like they're winning out later this year. If you're interested in gaining access to the spaghetti template and learning how to properly utilize it, you should consider joining the Paragon Group. That's pretty much it for the macro outlook. There's no major changes that are needed. Let's get into the medium time frame. There's quite a lot of things that we want to discuss here. So we'll start off with the boring stuff. First thing is, we're building out this range, right? The composite structuring, composite high is 70,000 even. It's actually shifted down. That's pretty surprising that it's such a round number like that. So 70K pretty much even on that on the range high. The range low at 62.5. So value has shifted down a little bit. That's the range that we are working with. The next kind of point that I want to make is the triangle argument, right? So at the beginning of this range, I made the argument that this was the triangle that we were building out. And obviously, it didn't end up working out. In hindsight, I should have been a little bit more cautious with that play just because how it became consensus. But if you zoom out, you can see a very similar formation building right here, right, where we essentially have a larger triangle forming. It's still that same structuring, with triangles. I really want to see the higher lows forming, so the structuring still looks good. And it's just funny how things play out that way. So we have a pretty interesting triangle building out. That obviously gets invalidated when we lose these lows. So let's get into some more serious stuff, right? From a risk on standpoint, we just talked about we want to see 65K on this chart. It's more like 66 or 67K reclaim. So that's your major reclaim, is reclaim mid-range, and then you're bullish, right? Next thing would be, you know, the most important thing right now, right, is going to be reclaiming the range lows. So we really want to see 62.5K get reclaimed, so basically start to get back over 63K. Last week, this is the doodle that I drew. We were over here. I thought we would drive down and then look for that reclaim, right? So that's what you're looking for right now. Other than that, if you don't see this reclaim, you should see some continuation down to attack these lows. If this isn't the buy the dip zone, then this potentially will be around 58K. If 58K doesn't hold the support, you know, we're looking at a lot lower for that. So the last kind of major level to address is 70K, right? That's your major risk on level. If you see value getting built up over 70K, then that's basically a massive risk on signal for us. I don't see that as being particularly likely anytime soon. Bulls have a massive climb that they need to do before we need to worry about that, but we always want to point out all the things that matter the most. So right now, from a risk standpoint, we're really just patiently waiting for this range to get reclaimed, right? Range low to get reclaimed, and then the composite structuring get reclaimed. Those are your first two triggers to put risk on. So yeah, that's pretty much it. The last thing that I'll mention, or last two things that I'll mention, one is going to be sentiment. So you guys have already seen this, I'm sure. Sentiment is, you know, pretty terrible right now. We're basically at the lows. We're at the lows for sentiment. We're also pretty close to the lows for volatility, right? Today was our first little spike up in volatility we've had in a while. I mean, you go look at realized volatility, right? We're really low on the spectrum. So in another like month or two max of low vol before volatility is going to come back in a big way, and we're going to see momentum. Okay, let's get into some altcoin talk. Pepe still looks really good. It's in local dip buying zone right now, so that's, you know, one of the reasons why I picked this one. I still think Pepe looked good overall. Obviously, bears are in control. You know, I sold a huge chunk of my Pepe spot at 16, so, you know, bears are in control right now. I would love to see that change, but for the time being, bulls are going to continue to get shit on most likely. That's pretty much it for me. You have my Bitcoin plans, got my altcoin plans. Yeah. Good luck out this week, and I will see you guys soon. Cheers.